Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick. I apologize. I'm a little bit congested this morning, but hopefully it's not too bad. We had a wild night just in terms of overnight headlines here and drama. There's the chaos over in Parliament. There's looks like the protests in Hong Kong may come to an end here soon after the chief executive there withdrew the extradition treaty that they've been protesting for months now. So we'll talk through those headlines. As far as the UK developments, we are going to bring on Michael Hewson from CMC Markets at 9 o'clock. So in an hour from now, he's going to try to break down the events of yesterday and sort of forecast today for us here. So that'll be at 9. So we'll save some of the UK Parliament talk for then. In the meantime, we have earnings, Michael's huge beat. We have Tyson issuing some not so great guidance, a couple activists, rumors and stakes, Tilray, Box, on the liquidators. So a lot to get to on our show. Busy morning. Oh, and I forgot to mention our 8:35 guest, Michael Sonnenshein from Grayscale Investments, aka GBTC. Joel, what is happening here overnight? Busy night.
Well, you didn't tell people this is a synthetic Friday for you. You're taking the rest.
Right. I'll be out the rest of the week in a wedding in Iowa.
Oh man, you're just too wild for us, man.
Too wild.
Is it in a barn? Is it a barn wedding?
Not in a barn. Although that's a good question.
S&P futures trading.
I'm going to a barn wedding this weekend. For real. Laura's cousin getting married at my father's or my father-in-law's farm.
You said
weddings. So barn weddings are good.
You said it yesterday.
Joel throws a joke out there, but I know it's real. For 3 days.
You are a hick. You said it yesterday, but no, you really are.
Did I say it yesterday?
Yeah.
I said I was at a barn party yesterday.
Oh, whatever.
I have a barn wedding to go to. Same place. Barn weddings are fun.
Whatever. Well, what's happening here overnight?
We're up 25 handles, 29.31. Choppy day yesterday has been resolved to the upside. Your pre-market high, 29.36 and a quarter, $5 off that. Friday's high, folks, 29.46 and a half. We're talking about the top of the trading range here. Not really getting a running start at it today, but boy, oh boy, we are knocking on the door of resistance. Maybe get back up to 3,000 if we can clear that level. You have crude in the red by 78 cents, just bouncing around here between 53 and 56. Gold down 10.40 at 15.45.40. And silver going in the opposite direction, up 14.3 cents at 19.38. Bitcoin down $150 at 10,650. Triple D, how you doing? Are you in a better mood today?
Not really. So I followed up my best month in 5 years with my worst day of the year. So it was one of those days where nothing was working out. I had a big position in the diamonds, which obviously underperformed because of Boeing. So that hurt. And then there was other things. And it was like I had two different stocks that were moving against me from ratings. I have one of those again today. So I'm 3 for 3 so far in September. I'm being the wrong way on the ratings changes. But I mean, this is how it goes. When you're trading overnight, sometimes overnight news will hit you. Sometimes it works in your favor. Sometimes it works against you. Yesterday was a day that it was working significantly against me because of the Boeing news. That obviously overnight Boeing was down over $10 at the open. But I mean, this stuff happens. You've got to take the good with the bad. If you're going to take overnight positions, you're going to have some losers sometimes. There's nothing you can do about it. This is the market that has no memory. That's what Doug Cass says. We're going to get Dougie on the show. But this is just the random walk. I call it the random walk market. Back from the random walk theory that says you can't look at previous pricing data to predict future pricing data. I mean, that's the case here right now. It seems like this market just does whatever the hell it wants. But we're back up here at resistance once again. We talked about this on Friday. It sells off 50 handles in the next couple of trading sessions. And we're right back up here again. I cannot, a day-to-day predicting this market is impossible.
Dennis, I have one theory here why you had such a rough day yesterday.
Why? My theory is that I lost a lot of money.
Right. No, that's true. I'm saying it might not totally be your fault. I mean, I know you put on all the trade.
No, it's my fault.
But you know what? I think the algos get messed up on 3-day weekends. I really do. I think that they're, the spoos trade Sunday night and all day Monday until 1 o'clock. You have a lot of, different, factors going on without the stocks trading. And I just think that because the way the market was yesterday too, and Spinner made a point here, you really thought the market could have gotten crushed yesterday with the China news, but it was just real choppy. And I just think that I don't know if they figured it out yet, but when you have those 3-day weekends with the spoos open, I think that it just messes up your trading systems, and perhaps that's why some of your hedges didn't work out.
Nah, my hedge didn't work out because of Boeing. That was it.
Really?
I had a huge diamond position. I mean, very, very big, and Boeing is 10% of it. So I had, and it's all just hedging, right? So I had diamonds. I had some other. I was market neutral, but because the diamonds are so heavily weighted Boeing, and Boeing's down 3.5% on their news, that's going to hit you. So, but if you looked all day, the DIA was obviously down more than the rest of the market thanks to Boeing. So, I mean, this stuff just happens. So,
good question from Eric, and he says, Triple D, with your arbitrage trading style, do you step away for a bit when it's not going your way?
never.
Or do you power through
Through
trading based on statistics?
No, because I'm very systematic approach. I'm doing things from a systematic perspective. Even when I'm trading ratings and stuff like that, I look and I'm like, okay, well, there's a rating change here. Maybe the stock, I can buy it up 0.5%, and I think it's worth 1%. There's so many different factors. I'm employing probably a couple of dozen different types of strategies every single night. And at the open and at the close. And we know I don't trade in the middle of the day because I feel like the middle of the day is a bunch of chop. That's very hard to predict. So I haven't traded between the hours of 11 and 2:30 in 5 years. And I'm going to continue in a day trading, that is. Sometimes I'm watching the market. Sometimes I'm doing something with my longer term portfolio, maybe with a swing trade potentially. But my regular day trading stuff is pre-market, open, close, after hours. That's pretty much what I'm doing. And I'm doing different types of arbitrage, but I'm big on the news. I'm reading the news as it's coming in, and I'm interpreting the news. And in some cases, news interpretation can be wrong. We talk about that. And if I believe it's wrong, I'm going to take a position in it. So all news interpretation, doing different things. But like I said, there's probably 20 strategies that I'm using, a different statistical analysis, like looking almost like quantitative stuff. And analyzing, what something is worth, and and looking, is a TLT way up? I talk about that. The relationship-based trades. TLT is way up, I'm probably shorting banks. TLT is way down, I'm probably buying banks. So I respect all those relationships, and I trade around them.
And you got a few people with the diamonds. Diamonds are the ETF for the Dow Jones Industrials. Would you use that?
We never talk about.
Well, we never talk about it. And diamonds, that's pretty much the general term that everyone calls it, right? For the DIA.
So yeah, it's called the diamonds, DIA. Yep. That's just the Dow 30. The
Yep.
problem with the DIA, like you can look this morning here, and it's underperforming here once again. And I don't know, there's probably something in it, and I'm not realizing what it is, but I'm looking, the diamonds are only up 0.49% here this morning. No, that's wrong. It hasn't ticked. So the one thing, consider the last, it hasn't ticked. So it's not underperforming. It's right on the money, because 263.64 is where it's bid right now. And the last was, for some reason, off-exchange trading throwing us out again, Joel. And an off-exchange trading tick that changes the last. That messes everything up. Ignore those FINRA quotes for the most part, guys, especially in the pre-market after hours, because they're old news.
Yeah. All right. We got a lot of news here. We just had a little educational segment. And also, folks, any term or anything that we talk about that you don't understand, you got to put it in the chat. We will take the time out to explain it. I know we have people with a lot of different trading and educational backgrounds here, so do not hesitate to raise your hand. No question is a bad question.
Spice is asking us about Tyson Foods. Why don't we start there? Because we're going to go into earnings here in a second, but Tyson gave a big warning last night, and this is a stock that Kramer was talking up just last week, so bad timing on Jim. Although he makes the good calls, bad calls, everybody does. I'm just pointing it out. TSN down almost $5 here. they warned right after the bell. Spencer, details.
Yeah, this one kind of came out of the blue, but they gave some preliminary full year, or they updated their preliminary full year EPS guidance, and they said that the range is $5.30 to $5.70. That's their new EPS guidance range for the year. The estimate was at $5.95. So light on that. They specifically cited margin compression, commodity market volatility, and implementation of enhanced food safety initiatives. They did say these are short-term challenges that could affect Q4 earnings. These are not long-term headwinds.
All those Popeye sandwiches that they're selling there probably aren't in the Tyson Foods yet. So as we're sliding up outside the door for that chicken sandwich, I'm pretty sure they get some of that stuff from Tyson. So that's on the earnings. But anyway, it's down $5. The stock had been really outperforming. I mean, the stock just made new all-time highs a couple days ago. So now you get a pullback here. It's a stock that has been very strong. I don't think this is going to be a situation where they knock it down 10, 15%. I actually wouldn't be surprised if they start to nibble here already. I would say they already have started to nibble because we were lower last night on this, Joel.
Yeah, the algos got a little bit carried away here on the initial news, as they always do, and they took it down to $84.
Yeah, ridiculousness.
Yep, 84.
There's money to be made there, guys. This is the kind of stuff I didn't trade the Tyson. This is kind of stuff that I would trade too. A little bit harder because it's moving, but sometimes things just overshoot.
And you got a rebound since you've had that dip to 84. We've peaked at 89.70. So I'll keep an eye on that. That happened after the 4 o'clock open, 4 a.m. open. So I'll call 89.70 resistance now, short-term resistance. I don't think we're going to see that pre-market low of 84. Let's see what a daily level could be. I like 87. I see 3 lows at 87 right in
support.
Yep, I look at 87 as support, and then 86. So let's see what happens at 87. But quiet consolidation, price discovery going on right now. If you are shorting this thing, you see it get over 89.70, then the bulls may take control in this one. But right now, quiet consolidation right around, where are we trading at? Right around 88.5.
Yeah, it's come back off the lows. Market helping everything here. A rising tide lifts all ships, lifting Tyson just a bit here too. If you're looking at sympathy, think Sanderson Farms, SAFM. Was slightly down last night. Again, because the market's so strong, I'm not sure any of these are going to open down. I also think of Pilgrim's Pride, PPC. That's actually bid up here right now, just slightly. Again, because the market is so strong. Tyson's going to be your leader, though, so let's see what happens. Maybe this is just, to Tyson. Maybe it's not going to affect the other ones here. I don't see a lot of food stocks trading down in sympathy here this morning, but there isn't much trading down here this morning. Let's be honest.
Nope, there's not. And just real quick for Alex, I did see Twitter way up in the morning when the market was down. It made a multi-year high here.
Why was it up so strong yesterday?
I don't know. Oh, Brentster,
it ripped right off the open. That thing opened flat and ripped up a buck, 42.50 to 43.50. Must have been some type of news. We had the Jack hack. I don't know if anybody's coined that, but kind of like the Jack hack.
Is that what they're calling it? Is that what you're calling it?
I call it the Jack hack. I think I made that up just now.
Okay, I like it.
The Jack hack, and maybe there was some news that they fixed all those issues. I'm not sure. That had, put the stock down a little bit early on. But I don't know why it went up 43.50. That was a big move.
Yeah, it actually went to 43.77 43.77 after hitting 43.48 the previous day. Twitter has not been in this area since July of 2019. So if you're looking for a bona fide breakout here, you got to settle over that 43.5 because it sold off pretty good. Trading up 50 cents, 57 cents here in the pre-market. Full disclosure, I still got this baby from I believe
you are like Warren Buffett. You buy something and you hold it forever. Where'd you buy?
17.
Holy genius. Man, you know what? You're a pretty good long-term investor. We start doing the long-term investing segments. We're throwing them to you. I like the short-term, like day trading stuff. You got this long-term investing because remember you rode the Western Digital for like 100%. What else you got in that portfolio?
Nothing. Exact Sciences, but that was Lisa's pick. But
We'll
No,
blame Lisa for that one.
I'm getting worried about this Exact Sciences here. Maybe I should stop looking at it. Look at that consolidation here between 118 and 122. Just look at that.
Has gone nowhere here for 2 months. It's getting taken over.
No, it's just they had the big move off earnings and just kind of hanging in there. But let's do our favorite store right now.
Everyone's favorite store. Dennis's favorite store. Joel's favorite store.
Scrapbook store.
My favorite store. The scrapbook store. Michael's huge beat on the earnings this morning. 19-cent EPS versus a 14-cent estimate. Sales of 1.03 versus 1.02 billion dollars. They gave some Q3 guidance that was higher than estimates. Their comps were flat to up 1%. I don't remember Michael's the last time Michael's gave comps up at all, like just up. I don't remember the last time that happened. Their full year EPS guidance and their full year sales guidance were both good as well. So good numbers here across the board for MIK.
Hate the stock. Always hated the stock. You want to know something crazy?
You came in long.
Yep. You can buy stocks that you hate. I took it through the earnings report long. Why? 2 reasons. One person was bidding up last night. So I was like, maybe, whatever. I'm seeing some action. So somebody thinks they're going to beat. But the other reason was it's in the doghouse. And some of these retail dogs have been, coming back here and squeezing. We've talked about this. So just short-term stuff. But I was like, you know what? If they say anything okay, this could rip up. And it did. I mean, we got up to the 7 handle here this morning. I'm out. I've sold it already. I sold it when I popped up on the earnings report. Sold right in here around this price. But it was a nice trade. I had a pretty good size position. I got nervous and sold part of it right last night. And I was like, I don't want to take that much through the report. So then I took a smaller size position, like obviously not a full size position. I was at a full size position. And I was like thinking, I'm going to take it all through the report. I didn't have the guts. And then it was bid up a little bit last night. I was like, I'm going to sell a little bit. So I sold a little bit, and but it was good. So, I mean, you can go long things when you get a feel like that, even stocks and companies that you don't like. I still think long term, I think every rally in Michael's is a selling opportunity. But short term, they have been squeezing some of these retail dogs. We've seen it happen this season. So that's what you have to identify is those patterns that are happening. And that's why I thought maybe they squeeze a little bit of Michael's here, and I think that's what's going on. Plus, there was those rumors, which was the other thing. Wasn't there somebody? There was something happening in this. I can't remember. Was somebody bought a chunk or something? There was something going on. I don't remember. We talked about it like a week and a half ago.
Are you thinking of GameStop?
No, well, maybe. I confuse GameStop and Michael's because they're both troubled retailers.
So they double comps. So they sold 2 pairs of scissors instead of 1 pair of scissors at their main store.
They sell, Joel, when they sell $30 pair of scissors, they got to be making some money because they're buying that from China for $1. So one thing is when they sell stuff, they're making money. But the spinner is saying the same thing. I mean, we have seen the beaten down names getting some pops on even okay earnings, anything okay. And that's why. And I actually had Navistar too. I actually had this one long going in. I left early last night. We were going out for a late dinner. So I was like, well, I'll just put some discretion on it. And I ended up selling it. And I came in, I was like, I saw it up 2 points this morning. I was like, I hope I still have it. And I went and looked. So I left an order out there and I got done last night. So I did not take it through the report. I was hopeful that I took it through the report after I saw it up $2, but I didn't. My discretionary order executed last night after I left.
All right. Let's do Michael's real quick. You did pop over $7 to $7.35. You have pulled back since then. So I'm just going to use 7. I don't think we've had major highs there. Let's see. That whole area you had, 5 highs between 709 and 737. So to get back up in that area again, I expect resistance. After the pullback, we're just hanging in here. It looks like you got a bid. It's 650 with Navistar here. You did get a big pop to 25.46. You backed $2 off that. I mean, both of these stocks have a lot of overhead supply. I'll look at 24.48 was a high on August 22nd. But you want these ones, if you're buying them off the open, you want you want the first 10, 15, 20, 30 cents to be in your favor. because if not, a lot of people underwater, multi-year lows for both the stocks. So we'll keep an eye on them off the open.
Then you also had last night, we can just finish off the earnings, and if you have any other ones, but Coupa Software, big pop. It's up 11 cents or 11%. COUP.
Yeah, Coupa is a trooper this morning. Q2 adjusted EPS 7 cents versus 5 cents. 5 cents year over year.
I caught that joke too, by the way.
Thank you, I appreciate that.
Coupa.
Yeah, sales beat.
Which one was that one?
Oh man,
who was the Coupa Troopa?
Which one? It was the yellow one. I don't know how else to describe it. No
shell on the back.
What are you guys talking?
We're talking about a video game from like
the Super Mario Brothers. Who's the Coupa Troopa? Was he a mushroom cap?
I don't remember.
I'm going to look up.
Remember? Okay. Coupa Software beat on the EPS. Like I said, beat on the sales. Their Q3 sales guidance was higher. Q3 EPS guidance in line. Full year sales guidance higher. Full year EPS guidance higher. So mostly higher guidance and earnings beats for COUP.
We're both correct. He was yellow, but he's got the green shell on the back, so he's the turtle.
All right, there we go.
This is an interesting chart.
I'll just do that in the background while I'm giving you a point. We got to pay
151.17. Just for that, Dennis, I'm going to make sure you don't.
Okay, I'm done.
151. This is an interesting chart here for you gap players here, because you spiked up to 151.17 and you backed off to 150, but you're not dying. There's no one out there with an axe to grind. Where's the bid at, Dennis? Where's the bid offer in this? Is there much out there?
Oh yeah, it's thick. 149.65 bid to 149.90. I'll say $150. What happened at $150? What's going to happen? That's my level in the sand. Big hole, psychological number.
Up $15. All right, I'll call 150 to 151.17 potential resistance here. And
what just happened with Starbucks? Good call by Apple in the chat pointed out. Starbucks just fell $4.
Hey, what do we got with Starbucks?
They gave some guidance less than a minute ago here. They're for full year 20 adjusted EPS growth below the 10% model.
All right.
That's not good news, because this stock trades at a premium to the rest of the group. We don't want to see any type of revenue decline here happening. I'm not buying this dip, not yet. I got to read the release myself, but I think this is one that could continue to leak. I don't like that. Your stock's been running too far, and it trades at a premium. I don't like hearing anything about growth slowing.
Right here, let's see. 91.55 would fill a gap from earnings. That was a big gap on July 25th. So if you're looking for a potential place to cover short, I don't know about initiating a long, I'd get out there 91.60 bid. If in fact the longer it takes to get to 91.55, 91.60, you might get a little bit of a rally here. But you had to bump up off earnings. You had the long consolidation. And now the consolidation's being resolved to the downside here. Currently, the pre-market low, the 92.01. So 50 cents away from that gap fill at 91.55.
All right, we'll move on from Starbucks. I'd let the dust settle on this one for a little bit. Let's go back. Other news, big news for Box last night. Those shareholders who have been underwater in Box are getting a little bit of a lift here this morning because Starboard took a big stake here. Spencer, details.
Yeah, Starboard's good.
When Starboard jumps in on these beaten down names, stocks are
good. 7.5% stake here. Starbucks disclosed in the Starboard disclosed in a filing yesterday in Box.
And the stock trading up $1.21. We had some analyst commentary, and they said, and I saw it just flying by, and I'm parsing it because I'm trying to go from my memory, but I believe I saw it flying by on the headlines that they or might push for a sale.
Well, they didn't
say that.
They didn't say that. They sort of danced around it.
Yeah.
We do not comment on interactions with our investors. Actually, this is Box.
But it's Box what was saying.
Right.
But Starboard was saying in there that they might actually, somebody said that they might be in there trying to push for a sale. Maybe they're speculating. I also saw some analyst commentary. I thought it was RBC but somebody said could be worth over 20 bucks in a takeout scenario here. Anyway, it's getting a nice lift here. It's getting a nice lift the last 3 days in a row, and that's going to continue here this morning. I'm not fading it.
What happened on the 29th, Spencer? Could you look that up? Because it went down and it made a multi-month low at 1246, but rebounded to close at 1413.
Yeah, that was their earnings report.
Earnings, huh?
Yeah.
I'll have to agree with Dennis here. Starboard has taken a lot of stocks. I can remember when they went into Microsoft a lot.
Lost some money fading Starboard.
That's what I'd have to say. If you're looking for a short-term target today, though, keep an eye on 1705. We are a buck off that. That comes in as your session high. You also have a couple highs right at the $17 area, but we've already leaked 95 cents off that. So I'll look for a daily level ahead of that, and there's really not much. See, once you clear 16 here, my next daily high comes in at 1681. So 1680, 17 even, major resistance for today, and doesn't look like it really wants to pull back much. It looks like since you've spiked up to 1705, you got a buyer here at let's call it 1575 has been holding as pre-market support really since that 4 a.m. open. Yep, since that 4 a.m. open. Pretty good volume trading with this too.
You know what's impressive this morning, just moving away from the stocks for a second, is silver. What a run yesterday. We got gold trading down. You have kind of like a risk-on market, which typically is not good for silver. And silver's up another 1.5% anyways. At least the SLV is. I'm not sure what the futures. Sometimes there's a lag there because of the closes.
No, there's a lot. The futures are. And it's going the opposite way of gold, too. There's big divergence.
Yeah, why? Why is gold down this morning, silver up again?
Well, it's just because for a long time, silver lagged gold on this rally. So it's just more of a catch-up rally, right? What a run silver has been on. It's actually the only precious metal that I do own in my long-term portfolio. I've always just liked silver relative to gold. Sold most of my gold stocks. We know I haven't been a gold bug. I've been wrong because I have been bearish gold here for a while, and it's been going straight up. I did own silver, and I do own the SLV in the long-term account, and it's been running. I think we get anywhere near like 20 bucks. So that's where I'm like, yeah, psychological. You know what? I do own silver, but it's just a bunch of silver coins that my dad passed on to me, and they have no numismatic value. And I remember when they got up to 50 bucks, I was like, man, gotta get rid of this silver. And I'm thinking, no, what if it goes to 100? And then it went to 13 or what, even lower than that. I don't know what to tell people that are long the silver market here, gold and silver.
It's been a really big run. If you're buying silver now, you are very, very late to the party. Could it continue? I think there's room 20. But if you're coming in here now, I mean, this is one from $14 2 months ago. This is one of its biggest moves in probably a decade. Like, this is a huge move, Joel.
To the upside,
had a pretty good run from like $13 up to $19. Maybe that's what we're trying to do again. But wow, it's been an impressive move from silver.
I'm looking at, the futures are tough because of the rolling contracts and the contango and whatnot.
The SLV is pretty good though.
Yeah, well, let's look at the SLV, and if you're really holding out for a target here, let's see. We cleared 1912. I see a pair of highs. Yeah, 20 bucks. Let's just call
it 20. I go 20 bucks.
Yeah, 2 months.
Throw my order out at 1990 to sell. But I might do that.
Yeah, 1945 and 1971 were a pair of monthly highs back in July and August of 2016 here. So there you go. And where are you at today? Today you're at 1947 and a half, up 23.8 cents. Silver really picking it up. Lower interest rates. I know Todd Gordon was on CNBC last night. I mean, these are momentum. And Dennis, another thing, you're late to the party. I mean, you could have said that about Roku, like how long ago? I mean,
you liked Roku though. We didn't say it about it on this show because when it was $132 and it had that little pullback from 140, that's when, I was saying I couldn't stomach the valuation, and I don't have a position in it, but I've liked it all the way up here. It's 160 bucks now. We got this one right.
Just hard. But
I was saying it could go 200. I still think Roku can go to 200. I think it could get there faster than everybody thinks too.
Is it that good?
It's up another $3 here's one. It doesn't matter. It's just hot. So that's the one thing.
Doesn't matter.
Earnings and revenues and valuation does not really matter until it does. Right now, the story is hot enough that valuation is meaningless. It will mean something eventually. And that's why Roku is not going in my long-term portfolio at these valuations. But right now, that story is hot, and that is a tradable trade right now to the long side. And I do believe this thing could see $200.
Yeah.
No position. I wish I would have been buying it when I liked it, $135, but I did not. Couldn't stomach the valuation myself. I'm a GARP guy. Growth at a reasonable price. That's growth at an extreme price. But these stories stay hot for a while, and the Roku story is still hot.
Better off just puts in something, letting get taken out on the downside instead of trying to pick a top. Or if you had a specific target, Spinner's target is 200 to 250. There was a price target raised today to 185. So, I mean, take your targets. I mean, I don't even know if downgrades or I don't know how much analyst coverage you get on this one, but
there's some.
A decent amount.
Yeah, decent amount.
Yeah.
Real quick, Dr. J in the chat with Alta. Alta tried to rally yesterday.
John and Jerry in the chat. Nice.
Yeah, it made the undercut, and you had the 235.76 low. Boom, the old red dog reversal. You went to 231.02. You came back up through that area. 235.76 was your buy point, with your stop at 231.02 now.
Yeah.
Yeah, I mean,
it's a better buy today than it was yesterday.
Even if
that way. And that is, going to be a lot of people because it was at 234 yesterday. So from a numbers perspective, but I actually like it better here now because now you had a little bit of a reversal, showing a little bit of life. Now you have a stop where you can stop up below 231. I'm still not playing it, but I'm saying if you are, at least you have an out now.
And, let's say you had a major short position and you're waiting to bring it in and you were looking at my 224 number. And now, now you're like, now you're going to have to buy it perhaps, in an updraft as opposed to a downdraft here. But we'll see that 231.02, good level. For today, if I was playing a little closer to the belt, your close at 37.41. Hugged your close. Actually, you've had a couple closes in this area. You had a 37.41. Oh, that's 337. So you don't have three closes in the same area. You have a close the day on earnings at 37.73. The close yesterday at 37.41. So that's what I'd be looking at if I was, trying to pick this up on the cheap. That's $2.50 from here.
Back to the news wires. Lumber liquidators. I have a small position in this. So
I was going to go there next, actually.
Opinion, but there was news on this last night.
There was F9 Investments, which is the firm owned by the CEO, Thomas Sullivan, or the founder, the founder, not the CEO. The founder, he already owns 6%, and he he increased his stake, and he says he's potentially exploring a take private offer with some private equity people.
I'll limit my comments. Like I said, I have a position on it. It just reminds me a little bit of Nordstrom, though.
1080 is where you spiked up to. When was that? Was that
last night on that news?
Yeah. Woo.
How it goes overshoot.
$150. You pulled back here. So let's just go into the last couple days sessions, and 970 and 972. That's 40 cents away, 35 cents away. That's your first area of resistance. Have no idea what price this guy's thinking of taking it private, but right now being stuffed out by people that are long the stock. Has had a nice little rally since it hit 659, so that's a nice pop. But boy, oh boy, this thing that formaldehyde thing never really. It did have some attempted recoveries to stuff, but man, people are just not using that kind of flooring here. So we'll see what happens. Might be able to get this an unchanged today if you think it's going to be higher. 936 up 10 cents.
Not much.
Yeah, not
I
much.
think the market's calling the bluff.
Yep, I think so too.
All right, it is 8:35 on the nose now. I'm going to bring on our first guest of the day, Michael Sonnenshein. He is the director of business development at Grayscale Investments. You probably better know them for their trust, the GBTC. Michael, can you hear me? Good morning.
I can hear you. How you doing?
Doing well. How about yourself?
I'm great. Thanks for having me back on. It's great to chat with you guys.
All right, I know Joel reached out to you, so I want to let Joel run with this because Joel, like it or not, you can't quit Bitcoin. You can't.
Why not, right? And it moves. Well, sometimes it moves, and sometimes it didn't. The Bitcoin faithful, we got excited here. I don't know if I should put we in that category, but you had the run to 14,000 and kind of pulled back. So first, before we go into some of the new research you guys have been doing, talk about that run to 14,000 and then the subsequent pullback.
Sure. So I think from our perspective, we've certainly seen a lot of growing interest around Bitcoin over the last, call it, 9 months as the crypto winter has melted. It has certainly attracted no shortage of more institutional investors into the asset class. And I'd say that as the backdrop from a macroeconomic perspective has gotten a little bit shakier, whether it's trade tensions or talks of interest rates or tariffs, it's caused people to really start thinking about Bitcoin as a digital hedge or a digital store of value. And so from our perspective, it's certainly not surprising to see Bitcoin have a good run up, kind of pull back to a healthier level. But from our standpoint, we'd say that fundamentally everything is moving up into the right.
Up to the right. Well, you're talking about Bitcoin as being a hedge against global liquidity events. Like, we got a lot of those going on with the Brexit or non-Brexit, US, China. But I mean, in order to really be, a viable hedge, maybe people using the GBTC, for that. I mean, is there enough liquidity? Is there enough of a supply to really make it a major player for hedges like the gold or silver market?
There's no question that it is. I think one of the biggest misnomers about Bitcoin is its divisibility. So even though there will only ever be 21 million Bitcoins that ever get created and put into circulation, each Bitcoin is divisible to the 8th decimal place. So there's actually 100 million units inside each Bitcoin. And so it lends itself to a tremendous amount of applications because of that divisibility. And so people should not be deterred by the fact that it's verifiably scarce. In fact, we think investors should be drawn to Bitcoin's verifiable scarcity, unlike gold, which we continue to find more and more deposits of around the world.
Is it really, though, scarce if you could divide it that much? Because it's not scarce. I mean, if you can divide something to that extreme of a level where there's 1 million units or whatever you just said inside each and every Bitcoin, it doesn't sound scarce to me at all. And I'm just, kind of playing devil's advocate with you here.
Well, so the protocol itself, I mean, this is an open source protocol. And so people everywhere can take a look at the source code and see that there will only ever be, this much Bitcoin ever minted. Not to mention, they can also take a look at the supply rate and always understand not only how many Bitcoins are in circulation at any one time, but also look out into the future and see how many Bitcoin, will be in circulation at time, at events in the future as well. But I think the important thing for you guys to remember, and as well as, your subscribers, is to really think about Bitcoin in the wake of different types of macroeconomic events, right? So our team has looked back at everything from Brexit to Grexit to tightening financial conditions around the 2016 election, looking at this again amidst the trade wars with China taking place starting back to earlier this year. And really, in all of these scenarios, we've actually seen that Bitcoin has experienced above market returns and certainly outperforming other market other asset classes during these drawdowns. And that's pretty unusual. It's unusual to find new assets come along that the investment community can look to as a hedge or as a diversification play when markets get rocky.
So how exactly, though, is Bitcoin a hedge for trade war stupidity?
Well, so you have to think about the fact that Bitcoin is non-government and so non-fiat backed currency. And so it is not subject to, the whims or the decision-making power of a government who controls interest rates, who controls their monetary supply, etc. And so the same way that investors may have previously subscribed to the notion that gold is a hedge, but maybe that's a hedge for a physical world being a physical asset, whereas Bitcoin is a hedge for a digital world being a digital asset.
Right, so that was where I was going with that. Then you kind of just took my point away from me. But how gold is the same way. There is no government behind gold. It's just a metal that we mine. But so I guess that sort of answers that point. But even if you say, all right, there's no government behind Bitcoin, that doesn't mean and so in that sense it can be a hedge. That doesn't mean people will trade it as a hedge, right? That doesn't mean the behavior matches the philosophy, right?
Well, I actually will respectfully disagree with you. Over the last couple of months, the conversation around trade tensions and the macroeconomic backdrop has really been, where should investors go? And the three places that people have been discussing are bonds and gold, which are no surprise, and Bitcoin. And that wasn't even the case even, a year ago. And investors are taking notice of the fact that Bitcoin has really doing laps from a performance perspective around gold over a period like this since earlier this summer.
What about and obviously there's been hacks of Bitcoin in the past. And this is something that scares me, and maybe a reason that I don't own any Bitcoin. There's a number of reasons I don't own Bitcoin, but I'm just scared of the potential that somebody could hack in and get my code somehow and steal my Bitcoins, and then I would be out and I would never have it again. How's the GBTC structured to protect us against potential hacks?
Sure. So let's assuage those fears.
Okay.
There is a common misunderstanding around Bitcoin getting hacked. What has certainly happened and what is certainly prone to happening is an exchange where you could buy and sell Bitcoin, or a service that might help you store Bitcoin. Those are certainly susceptible to hacks or theft, the same way that the credit card companies get hacked or banks get robbed. These are common occurrences. However, it doesn't mean that Bitcoin is fundamentally flawed. The same way if a bank gets robbed, it doesn't mean the US dollar is fundamentally flawed. So we have to separate Bitcoin itself getting hacked versus a company operating in the industry getting hacked because of poor security measures. So let's first of all make sure that we separate those two.
Sure.
Second of all, I think that the Grayscale Bitcoin Trust, which is quoted under the symbol GBTC, is a way that many investors are gaining exposure to Bitcoin so that they don't have to figure out where to buy Bitcoin, how to transfer it, or how to store it. They can instead get exposure to Bitcoin right inside their investment accounts alongside the other stocks, bonds, et cetera, that they may own. So GBTC is solely and passively invested in Bitcoin. So it has the same product structure as a lot of other commodity products that are out there on the market, be them for gold or oil, et cetera. And so this is the only US-based publicly quoted Bitcoin product. And for a lot of investors making their first or even their only investments in Bitcoin, this is a really nice, familiar way for them to do so.
We're on the line with Michael Sonnenshein from Grayscale Investments. So you're talking about it as a hedge, like for the trade wars and for Brexit and everything's going on. So in the absence of those fears, what will be, like, let's say the trade wars settle tomorrow, Brexit, who knows what's going to happen with that? We'll figure that out at 9 o'clock with Michael Hewson. But what's going to, in absence of those fears, what's going to be the catalyst for Bitcoin?
It's a great question. It's not just a fear trade, right? Bitcoin actually has quite a bit of potential to do well, even over normal economic cycles. I think that Bitcoin is one of the most exciting financial assets that exist today. It is not for everyone. It certainly has a risk reward scenario, unlike pretty much anything else investors could touch. And the importance here is that it actually has a lot of the store of value characteristics that make it similar to real assets like gold, but it actually has a lot of hard money attributes like immutability and scarcity that make it investable as well. And so it lends itself to a lot of exciting opportunities, but it's still very early days for Bitcoin.
How do we value this though? So you could say all this, and I hear these arguments all the time. I mean, I don't even follow any Bitcoin people, but my Twitter stream's littered with it. So, you know, it's props to you for being, you know, on top of it, being one of the first ways for investors to really get there if they didn't want to go buy the physical Bitcoins themselves, because it's really talked about. But I see the scarcity argument, which I don't totally buy because it's so divisible. You know, I see, you know, everybody's saying, oh, it's worth 100,000 or it's worth 1 million. How do you come up with a number to value something that doesn't have cash flows, that doesn't have dividends, there's nothing for me? Like I'm a chartered financial analyst. I look at Bitcoin and I say, maybe it's worth 10,000, maybe it's worth 100,000, maybe it's worth nothing. How do I come up with a number? How do I fundamentally value this to say, okay, this is where I think it could be, and this is why it's going to 100,000? What's the fundamental argument behind it to say we're going to Bitcoin 100,000 or Bitcoin 1 million?
So I think you have to look at supply and demand. Supply and demand usually intersect that, you know, and create price discovery for a commodity, whether it's orange juice or even gold. And with Bitcoin, the supply is very known and very predictable. And so it is a variable here that can be stripped out of the equation. And so Bitcoin's price is really a function of its demand. So investors today are buying Bitcoin with the idea that the demand for Bitcoin should grow over time, which would inherently be accretive to its price. Now, why would the demand for Bitcoin grow over time? Because it stands to disrupt or displace a lot of existing areas of the financial world. Whether Bitcoin takes some share of the gold market, and you can apply some probability to that over some time period, whether Bitcoin becomes the ultimate store of value for, you know, millennials and more digitally focused investors, or even if Bitcoin becomes the ultimate mechanism by which value moves around the world, you know, displacing traditional financial systems like Fedwire and ACH and, you know, Euroclear and, legacy systems that move value. And so I think you have to look at what applications are possible. And you are certainly buying Bitcoin with the expectation that demand for it should increase over time.
Michael, I do want to bring it back before I let you go to this white paper you guys have done about Bitcoin as a hedge against trade wars. So you note that Bitcoin has generated a cumulative return of 104% between May 5th or from May 5th to August 7th. How much of the recent rally in Bitcoin do you attribute to this trade turmoil?
Quite a bit. Again, the narrative around digital assets like Bitcoin has fundamentally shifted. I would say now we're experiencing probably odd percent of our asset inflows are coming from institutional investors, all of whom are concerned about the trade wars, concerned about tariffs, and concerned about how this is going to affect existing exposures that they have. And so many of them have either been beginning positions or adding to positions in digital assets like Bitcoin as a hedge against this type of uncertainty taking place in the market.
And do you guys have any forecast for potential legislation down the road regarding governments just stepping in here?
Well, so I would actually say that many governments have actually been pretty proactive and positive around the space. You know, certainly here in the US, having regulated futures on CME, seeing legacy, institutions, be it Fidelity or others getting involved in the space has certainly been positive. And so I think from a regulatory standpoint, we have to realize how rapidly the space is moving and just continue to work with regulators as best we can to keep them abreast of developments in the space. But there's generally a feeling of let's not squash the innovation and let's use new industries around digital assets to create jobs and ultimately create the appropriate regulatory framework to help foster innovation.
All right, Michael Sonnenshein is the Director of Business Development at Grayscale Investments, also known as GBTC, is their ticker. Michael, thanks for the time today and have a good rest of your week.
Thanks, guys. Take care.
All right, 850 here on the nose, Joel. Where are we at? Oh,
I was on mute. Hanging in here, pre-market high 36.25. We're trading at 32.5. So right up near the highs of the session. Been kind of quiet. I'm sure we got a lot of buy imbalances this morning with the market being up the SPOOs being up nearly a percentage point. Good, interesting talk. I don't know about the fundamentals. I just kind of look at like 10 grand. I was looking at that over the weekend, and I'm like, man, I should pick some up here around 10 grand.
I think so too. So I was just kind of, playing a little tough love there though, but I've said I think it's going 20,000. I don't know how to that's just technical. The only way that I can really get a price on this is look at the technicals like you're looking at it, Joel, and it looks like it wants to go higher.
I know.
There is no fundamentals to analyze. It doesn't have cash flow. I mean, you could say people throw out a million or this or this. None of that. You can't analyze that. All you can analyze is technicals, right? That's what you got. The thing's got a story. We've talked about that for a long time. So right now the fundamentals don't matter. It's still got a good story. It's not going away. It hasn't gone away yet. It didn't go away. Went down to 3,000. Moved to 10,000. Makes me think it's going back to new all-time highs. So I kind of want to be long Bitcoin. How should we buy the GBTC? Is that how we should do it? Or should we go get our Bitcoin account and just pray we don't forget our little login code?
If you are really genuinely concerned about hacking, I would probably buy GBTC or the futures and call it a day.
You can do the Bitcoin futures too.
If you want to own physical Bitcoin, then have at it. Go to some exchange. There's many of them, and just sign up and do your Bitcoin trading.
I don't even know where my passwords are.
Joel's gonna be the one that his Bitcoin's gonna be lost forever because he's forgot his password for sure.
What's our next 3-day holiday?
That's what I wanted to ask him, and I forgot.
Oh man,
yeah. I knew there was something I was thinking of, and I couldn't remember what it was. It was the 3-day rally. But all right, I'll have to email him and see what he says about that. But 8:52 here, we're going to bring on Michael Houston from CMC Markets in 8 minutes to try to provide some clarity to what's happening over there in the UK regarding Parliament and Brexit. In the meantime, we had a couple more earnings. We have a couple of ratings. We didn't discuss any ratings.
Do the ratings. There's so many.
Do that. Lombardo 141 slept in today. So he's asking about COUP. And that just sprinted to a new all-time high off its report, 151.17. A lot of price discovery going on right here. Bulls and bears are battling it 149.50 area. So 149.50 holds. I look at go up and challenge at pre-market high. If not, you open below that area. Longer it takes you to get up there, I would look for a little bit of profit taking. But just a quick update here on COUP. Sorry about that, guys. Let's go to the ratings.
All right. Not as many today as there were yesterday. Activision Blizzard catching an upgrade from BMO.
That's what I liked.
Yeah. I knew you like that. Upgrade to outperform here. Price target raised from 43 to 60 on ATVI. Let's talk about that, Joel.
Nice pop. Original pop. Finally cleared that $50 area, but 52.83 is your high in pre-market trading. You had a spike high the other day at 52.22. So for this one, holding 52, closing above 52 will be a major accomplishment. You had a bad month, and this was back in, you had a couple bad months, but I'm looking at November.
Been a lot of bad months in this. I've been long it.
Yeah, 69.05 to 49.88. So we're not just going to whoosh back up to 70. There's going to be sellers here and in between, but surely looks sleepy on the monthly chart here. I'm not shorting this one today.
Remember that their preeminent franchise, Call of Duty, has a new game coming out October 25th. So
and that's a wild card too. When they get these free-to-play games, a couple more of these, we've seen some significant pops. That's kind of why I'm long it as well. I think you could get one of those pops eventually. But I've had this in a while. It's been a dog for me, really. I bought it right around 51 bucks. It got down to 41. It came back up to even. Then it's down, then it's up. I keep getting back to even on this, and I keep not selling it. Should try to get my money back. I'm up in it now. At 52.37, I would be up now, but I don't know. I think eventually it's going to go. Main reason I have a long-term portfolio, like we said, we had Michael Pachter on this show, and he thought this was about 6 months ago. He thought this was a double in 2 years. So we're a year and a half away. I don't know if it's a double, but I like the Michael Pachter analysis. He knows a lot more about video game stocks than I do, so I went with Michael Pachter.
Guess who our guest is going to be on Monday, September.
Michael Pachter.
Michael Pachter.
Is it?
Yep.
And I can get an update on whether I should sell my ATVI or not.
Going down the ratings list here, TripAdvisor upgraded UBS to neutral, though they did lower their price target from 44 to 40. Campbell's, who just had earnings, upgraded to neutral. Piper Jaffray. Stamps.com upgrade to neutral. Roth Capital, that one's hanging out.
Stamps is back.
Seems like we have a consensus bottom in Stamps.
I guess so. It's $32. It's doubled since the bottom there a month and a half ago. So, or I guess it's 2 months ago. So yeah, it's come back a long ways. But yeah, I don't know if I'm coming in here now and saying it could fill the gap, could go to 80. But and I guess you got your consolidation period a little bit here. So if you were playing it, I wouldn't want to be long it over. I wouldn't want to be long it under $62.
Yeah, all right. Yeah, trading up $1.80, not a lot trading. Yeah, Ryan Craver talked about this a couple times. I know he talked about it when it was after that first decline, and then he liked it after the second decline too. So we'll get Ryan on here in the next week or so. I haven't been able to get him on here to wrap up this crazy retail earnings season with big winners and big losers. And any of those other ratings that we kind of glossed over?
Yeah, eBay catching a downgrade this morning from UBS to neutral. What else did I see? G3 Apparel down, Bank of America to neutral. That's pretty much it. I think those were I didn't see any initiations that were super interesting. So that's pretty much it for the ratings. We did miss on the earnings front American Eagle. It is now actually the top loser on my movers filter here this morning, and I do have some price filters there, so I do filter by price and market cap a little bit. But this is AEO down 10% here. Q2 EPS 39 cents versus a 32-cent estimate. Sales of 1.04 versus 1.01 billion dollars. So sales and EPS beats for the second quarter. The Q3 EPS guidance was light, however.
You are testing the key level right now as we speak live here on Benzinga's pre-market prep. 1452 was the low of the move back August 15th. We are at 1450 right now. Does this hold? That is the level you're at right now. We need to see this hold, because if it goes below this level, not good news. But I see a lot of little buyers lined up here. I wouldn't be surprised if we bounce here 1450. No position, but I'm interested.
Someone like right when that news came out, I mean, you had a step down seller here, much lower highs on the 15-minute chart. Now, where are they going to release at the throttle here at the low of the move? I don't know, but just look for maybe a new 15-minute high here before you get too bullish on the long side. Now, if you're short here, that's a different story. You definitely start nibbling here, see if you get hit on some bids. Low of the move. What's the other low we have here? Nope, that's 1528. We're going back to levels we haven't seen since November of 2017 when you had a 1250 low one. But let's see what happens. First things first, let's see what happens at 1450.
All right, let's do one more before I bring on Michael. I want to talk about Tilray here, and I want to tip my hat to the Benzinga News Desk for their characterization of this pop yesterday. So I'll read you the tweet. This is from Dams Consulting. Tilray rumor that a major tobacco player is going to make a bid for company. If one does, the group will get hot, coming from a big trading desk in NYC. That's all I heard. Good luck. And the way that the news desk here characterized that tweet, questionable tweet from Dams Consulting. Questionable indeed.
Stock popped huge on this. Squeeze them a bit. I say it's another selling opportunity. Yeah, that's just my opinion, but that's what I say. I say it's another selling opportunity.
Yeah, very, very, very vague here. We're trading down. We're in the red. 30. What was your high from yesterday? 30.97. Backed off the close at 30.10. So if there's any truth to this or any prospective price above $31, we should hear about that pretty soon. The closing price of 30.10 is going to be important for me too, as anybody that was buying it on those rumors, that's where they're going to hit their mark at 30.10. But just a vague rumor, and the other ones, CGC really didn't pop off it.
A little bit. They showed a little life on this.
Yeah, well, that's
and maybe they get to follow through here. I I think, the one good thing is they've stopped going down the last couple of days, so it's pretty good timing. You could squeeze them a bit here. I mean, Tilray, I don't know if I'm chasing that one, but some of the other ones showed a little bit of life off this yesterday, and you're not that far from the lows, so I could see a trade here. I still think they're going lower longer term, but short term, I can see a trade to the upside. I don't mind a couple of these on the long side.
All right, it's 9 a.m. I want to bring on our guest now. It's been a while since we had a 9 o'clock guest, but I'm bringing in Michael Hewson, Chief Market Strategist at CMC Markets. He has a longtime friend, old friend of the show. Michael, I know you're on Bloomberg Radio doing your best to explain what is happening. Can you please try it for us? What is going on over there?
That's an extremely good question, and it's a question that I've been asked on a number of occasions. Basically, there's been an attempt, or there is currently an attempt going forward in the UK Parliament for anti-no deal Brexit MPs to extend the Article 50 deadline from the 31st of October to January 2020. Now, what that would mean is it would prevent the United Kingdom leaving the European Union without a deal. And there's been an awful lot of, shall we say, internal disagreement inside the Conservative Party as to the wisdom of doing that, hence the splits that we've seen within the governing party. Now, last night, there was, how shall we say it, an amendment put through by these anti-no deal Brexit MPs, forcing the government to give up the order paper for today. In other words, it's essentially like a menu in the restaurant. The government usually writes it. In this case, the opposition is writing it. And tonight they will be debating a motion to force the government to ask the European Union for an extension to Article 50, preventing the UK leaving the European Union without a deal.
So that's what the majority can do, but can't Boris Johnson also have a snap election here?
He can if 2/3 of MPs agree to it. Under the terms of the Fixed Parliament Act, which came in 2010, you can circumvent the 5-year term for the Fixed Term Parliament Act if 2/3 of MPs agree to that. Now, it's unlikely that 2/3 of MPs could do that, because if you have an election before Brexit Day and Boris Johnson wins, then he can rip up the rule book and leave the European Union on the 31st of October without a deal. And that's not what they want. What they want to try and do is force Boris Johnson to go to the European Union on the 19th of October to ask for an extension if he isn't able to arrive at a deal between now and then. So it's unlikely there will be a new election before the 31st of October, even though Boris Johnson is now asking for one. It's unlikely that the MPs will fall into that trap, because if they lose the election, they then lose complete control if Boris Johnson gains a majority, which is something that he currently doesn't have.
So we can obviously see how the markets are reacting here by looking at the charts. But Michael, from your vantage point, from your desk, from your office, what is the sentiment out there?
Sentiment at the moment is extremely uncertain, because one thing that this motion won't do, if it succeeds, is take the prospect of no deal off the table. It won't do that. All it will do is it will just push the cliff edge from the 31st of October this year to the 31st of January next year, because there are only still 3 options available to MPs currently on the table. Option number 1 is to leave without a deal, which they don't want to do. Option number 2 is to leave with a deal, which they don't want to do because they rejected Theresa May's deal 3 times. And there is some talk that they could bring it back for a 4th time, or revoke Article 50 and not do Brexit at all. And they don't want to do that either.
So, Michael, this has been going on for 3 years, 3 years plus, June 23rd, 2016. And I feel like nothing's changed here. Just talk about, I mean, Spencer mentions the sentiment, but like, what's changed over there? I mean, the British pound is, it's been pounded. I mean, every day. I mean, what's gone on? Has there been any fundamental, which is everything waiting for Brexit is
Pretty much.
solved here?
Pretty much everything. What has happened is that things have become much more polarized between leavers and remainers. You've got both extremes basically shouting at each other, and you've got what I would call is the majority who are in the middle, who just want this done. But you've got the remainers on one side who won't countenance anything other than reversing Brexit, and then you've got the leavers who want Brexit in the hardest possible terms. And unfortunately, they are making the most noise, and that's what the media is focusing on right now. Now, if there was an election, and I think we will get an election, it's just a question of the timing. And I think the election is probably more than likely going to come after the 31st of October. But what then happens is anybody's guess, because we still don't know what type of government we will have post 31st of October. It could be a Corbyn minority government. It could be a Johnson minority government. At the end of the day, MPs triggered Article 50, which set in motion a train of events without really understanding what the consequences of that were. And the consequences of that are that ultimately you have three options: leave with a deal, leave without a deal, or revoke Article 50. And at the moment, they can't decide or get a majority on any of those three options. And all that an extension to the October deadline will do is kick the can down the road. And as we all know, that's something that we here in Europe are particularly good at. If it's not the European Union, it's the United Kingdom. Don't deal with a problem if you can kick it down the road. And that's essentially what's happening. It's not an ideal scenario. I think there's an awful lot of people here at the moment who would prefer a no-deal Brexit as opposed to 3 more months of this mess. Because ultimately what's happening is no one's investing and the economy is grinding to a halt.
Michael, how long is Parliament in session for?
It will be in session till the end of this week, and then it's off until October. So there's a European Council meeting on the 17th of October. Parliament returns after this week on the 14th of October. So there is still time for Boris Johnson to come to a deal with the European Union. The biggest problem that the European Union's got is even if they arrive at a deal with Boris Johnson, he may not be able to get it through Parliament. So we're in a catch-22 situation. I think what the anti-no dealers need to decide is what option do they want to go with? And essentially it's the least worst option. But he's got no majority now. He's expelled 21 of the MPs who voted against the government yesterday, which basically means to all intents and purposes in a minority government. So there has been some talk we might see an election on the 14th or 15th of October. I think that's unlikely, because if Johnson were to win it, then no deal will become a much more probable outcome than is currently the case at this moment in time.
I feel like this could be solved if you guys would just write down your constitution. But
I'm not sure it would, actually.
Okay.
I'm really not sure it would.
Probably not at this point. 3 years of this and more to come. Michael Hewson, CMC Markets. He's our chief market strategist. Mike, thank you for the time today. And I feel a little better, but I'm still confused. But I'm sure I think
you're not the only one.
All right. Thanks a lot, Michael.
Cheers. Thank you.
All right. 9:08. I want to wrap up here, Joel. Final thoughts on this market?
As always, we got to take out that pre-market high, 36 1/4. I mean, we've come a long way, 34-point range. We're averaging about 50 on the 9-day average range. So getting to that pre-market high, 36 1/4. And then Friday's high is another 10 handles above that at 46 1/2. Put the daily up here of the spider, and you'll see exactly what I'm talking about here.
Back and forth.
Oh, I mean, this has just been an area of resistance, for us to clear this 294, 290. Look at 293. Look how many times we've knocked on the door there. There's your leg up to 300 or 3,000 in the S&Ps, and big move overnight. And these are tough days because, you're going against the trend by shorting it, and then, you're buying it up 25 1/2 handles. I'll be looking for a little bit of a pullback. So enjoyed Michael's good job getting Mr. Hewson on here. to discuss the Brexit situation.
Yeah. It was
Nice
good.
talk on Bitcoin.
It was good. I want to thank both Michael and Michael for coming on today. You can rewind our show. You can catch our podcast, catch any of our archive shows on our YouTube channel or wherever you get your podcasts. That's iTunes, SoundCloud, Stitcher, Spotify, etc. Please remember all the information from our show meant to be used as informational purposes only, not for investing or trading advice. If you have any questions, comments, concerns, email us premarket@benzinga.com. Like Joel said at the top, I'll be out the rest of the week, but you're in good hands with Chris. Joel and Dennis will, of course, be here. Everyone have a great rest of your week. We'll be back with you on Thursday.